Coming up on Business Incorporated. IEA says OPEC Plus impasse risks price war as demand surges. An African Continental Free Trade Area Agreement gathers 40 ratifications. Malawi and Zimbabwe signed bilateral trade agreement. Hello and welcome to the program. I'm Ladi Williams. Let's get started with intraday market numbers here in Africa. The market in Nigeria was up marginally by 0.01%, while South Africa slipped 0.10%. Egypt gained the most, up 1.62%, while Kenya closed Monday's trading session negative, down 0.45%. And in the Middle East, most of the markets were positive at intraday. Abu Dhabi was up almost 0.5%, and Dubai index inched up by 0.10%. Saudi Arabia was also in positive territory at 0.22%, while the Qatari index is the lone loser, down 0.08%. And European stocks struggled for direction in the morning ahead of earnings reports from several big banks in the U.S. For more now, let's bring in Conrad. Hey, Conrad. Well, Wall Street and also the stock exchange in Frankfurt have started the week with new record highs. What's driving optimism, and what's the mood like among traders in Frankfurt?
Well, the mood is pretty good here in Frankfurt. The German index managed to climb on a new record high this morning. What's making, if you want to, search for a soft spot of this new record high, what's making a few people on the trading floors, what makes them uneasy, is that the reasons behind this new record are mainly outside Germany. It has to do with anticipation of strong earnings reports in the United States. And it has to do with strong Chinese export numbers. You know, our economy, our German economy, is so intertwined with China that very often our share prices profit when China comes out with strong data, as it did today, where it reported very strong export numbers for the month of June. What this is not about is strong, resurge of domestic economic activity in Germany. This is still very much under the influence of COVID-19 and of uncertainty about when the pandemic will really be tackled with, so that our domestic businesses can grow and prosper again. This is not yet happening. Still, we have a positive record high, of course, on the trading floor, and that is causing a lot of smiling faces among traders.
Well, Volkswagen Group came out with a new strategy for the years until 2030. Describe for us the plans of Europe's largest car maker.
Well, I think I can describe this new strategy in one sentence. This is supposed to transform the Volkswagen Group from, an old-school engineering firm making hardware, making cars, into a 21st century digital tech firm. Let me give you an example. Volkswagen plans to install a new development center near its headquarters in northern Germany. For this, not many classical engineers with a degree in car design will be hired. But Volkswagen is looking for software people, for programmers, for people who are able to write the code for all these beautiful things that, the strategy talks about. Let me give you a few examples. Self-driving cars, a cloud-based automated driving platform, new mobility services. This is the sound of the strategy of Volkswagen in this second decade of the 21st century.
I hope I'm ready for self-driving cars. Anyway, tomorrow the European Central Bank wants to decide about the introduction of a digital euro. Any indication what the decision will look like?
Yes, the indication is that what's expected for tomorrow is an announcement of a 2-year design phase for the digital euro, followed by a 3-year test phase for the digital euro. So it's very unlikely that we are going to hear many details tomorrow what this digital currency is supposed to look like. Still, this will be an important kickoff announcement of an important development for our currency, because currency competition is going to be stronger in the coming years. The question which world-leading reserve currency dominates. Of course, it's continuing to be the US dollar, but the question whether or not the yuan can become a more important reserve currency than the euro is open. So if the Europeans want to have their currency being another leader in this race, they have to do what the others do. And the Americans and the Chinese both are working on the digital reserve bank currency. So the European Central Bank has to do it too. It's going to be interesting to hear what they say tomorrow, but the kickoff is the news, I would say.
All right, it will be interesting to see how these digital currencies play out. Anyway, Conrad, thank you so much. And in the UK, experts have been plowing through today's financial stability report from the Bank of England. Let's get details from Juliana now. Hello, Juliana. There are several takeaways from the BOE's financial stability report today. Which aspect is getting the market talking?
Good afternoon, Laddie. Well, no surprises really that everyone's talking about the lifting of the ban on paying out dividends. This was a massive story affecting investors in British banks, and this happened because, of course, of the pandemic. The Bank of England wanted to make sure that lenders in the UK were financially stable and could help out the government if need be occurred. And it did occur, and of course there were so many billions of pounds worth of government-backed loans were paid out by lenders. This happened in April last year. In December last year, there was a little bit of a loosening of the restrictions, but alas, the red tape has been pulled out, and investors can start reaping the financial rewards from British banks. It's been a good thing. The Bank of England also thanked banks for their resilience and being best prepared to handle all of the economic pressures that we've had in the country over the past 18 months or so. So that was that, and there were lots of cheers and headlines from that. Then, of course, there were more pressing matters such as debt. We know that debt currently stands at almost 100% of GDP, over £2 trillion at the moment. A lot of businesses, small to medium-sized enterprises, which are the heartbeat of any functioning economy, a lot of them are struggling to pay back some of these loans. Apparently 25% of businesses who have taken out some of these coronavirus loans have already defaulted on their payments, particularly when it comes to the hospitality sector, who have been open and closed and opened up again. About 11% of businesses within the hospitality sector have stopped paying back debt since January, so they're 6 months also behind now. So the Bank of England really want to take a sharp focus on that. Lots of encouragement for the Bank of England to start tightening up some of that loose monetary policy. Of course, the banks would be really interested in them raising the historic low interest rates of 0.1%. But according to the report, that isn't likely to take place anytime soon. I think they're desperately keen to see what happens to the economy once the furlough scheme, which is still supporting about 2 million workers here in the UK, comes to an end in September.
Well, how are the shares in UK-listed banks reacting to this report? You know, in the morning, I saw the FTSE 100 was among the risers.
Yes, the FTSE All-Share did open up in positive territory, led by the banks. NatWest Group was the biggest riser. Shares were up by about 1.8%, followed by HSBC at 1.5%, and then the Lloyds Banking Group as well also got a surge by that news. Their shares were up by about 1.4%. There's been a bit of a lackluster move on the FTSE. Lots of interest in the US inflation figures. I just actually got an alert showing that inflation has jumped to 5.4% in America, which is obviously absolutely huge. We've been discussing that extensively on this programme over the past couple of weeks. So it would be interesting to have a live report from the FTSE. But as it stands at the moment, at intraday, the all-share is up 0.09%. The FTSE 100 is up by 0.09%. 0.05%. And the FTSE 250 is up by 0.18%. In the currencies market, the British pound is down against the US dollar by 0.20%, down against the euro by 0.04%, and down against the Japanese yen by 0.25%.
All right, so Virgin Galactic said it may sell up to $500 million of shares after completing a successful, space trip on Sunday. Is this also a talking point for investors in the market?
Yeah, it is a talking point. Of course, it's a talking point across the world. A lot of us here in the UK got engulfed with football news on Sunday. And as that was taking place, Sir Richard Branson, the billionaire entrepreneur, managed to climb 50 miles above Earth's surface, beating his rival, the billionaire, former CEO of Amazon, Jeff Bezos, by just 9 days. He's going to be going in a couple of days. He's going to be going much higher than Sir Richard went, but he is obviously in his 70s, so we'll give him that. And he was the first to do it. This is a massive marketing tool, a big talking point now, especially as we've also got the likes of Elon Musk there. But shareholders reacted slightly differently to the news that Virgin Galactic had put in a $500 million bid to sell some of its shares, because as soon as that news was confirmed, their shares plunged 17% on the New York Stock Exchange. I think this is obviously because they are now realising that if this space tourism is going to become a real thing, then it's going to cost a lot more money than Sir Richard had envisioned in the first place. This is going to start taking place next year. That's what we're hearing. According to sources, 600 very wealthy individuals have already put down their down payment for a ticket above Earth, costing between $250,000 to $300,000. So yes, it's all in the running now. But what a phenomenal scene it was, seeing Sir Richard above the skies.
Very expensive ticket, I must say. All right, Juliana, thank you so much.
Yeah. Thank you.
All right, shares in Asia Pacific were mostly high on Tuesday trade as investors reacted to the release of China's trade data for June. Hong Kong's Hang Seng Index led gains regionally as it jumped 1.85%. In mainland China, the Shanghai Composite rose 0.22%, while the Shenzhen Component shed 0.20%. China's exports in June jumped 32% as compared with a year earlier. The Nikkei 225 in Japan gained 0.78%, while the Topix Index advanced 0.77%. In South Korea's Kospi climbed 0.74%. Shares in Australia advanced as the S&P ASX 200 edged up 0.23%. And U.S. stock futures were basically flat after the Dow Jones Industrial Average on Monday closed just shy of 35,000. Second quarter earnings season officially kicks off on today with earnings from two big banks along with some other companies. The Dow Jones Industrial Average futures fell about 20 points. The S&P 500 futures was unchanged, and NASDAQ 100 futures traded in mildly positive territory. The market will also be watching a key inflation report due at 8 a.m. The release of June's Consumer Price Index. CPI is expected to increase 0.5%, but Juliana gave us that update right there. And the International Energy Agency says stalled talks by top oil producers over releasing more supply could deteriorate into a price war just as COVID-19 vaccines are sending demand for oil surging. Spat between Saudi Arabia and the United Arab Emirates forced OPEC+, which groups producers from Organization of Petroleum Exporting Countries, Russia and others, to abandon talks last week on boosting production after days of negotiations. IEA says though rising virus cases in some countries remain a key downside risk, oil storage levels in most developed countries have fallen well below historical averages, and draws on oil stocks with autumn are set to be the largest in at least a decade. Maintains that oil markets are likely to remain volatile until there's clarity on OPEC+ production policy, and volatility does not help ensure orderly and secure energy transitions. Or is it in the interest of either producers or consumers? And after the break, we'll look at the commodities market updates. That's in a moment. Do stay with us. Welcome back. On commodities market update, our focus is on cocoa. The price of cocoa in Nigeria is roughly around 700 to 780,000 naira, which translates to $1,551 a ton. However, global prices range between $2,300 to $2,800 per ton. Ivory Coast and Ghana are global leaders with a combined share of 53.45% of global cocoa production and are giving their farmers the market price. This contradiction, no doubt, has some consequences. Let's bring in Messi Lawrence now, research analyst with Financial Derivatives Company. He'll be discussing this with us. Hello, Messi. Great to have you.
Thank you for having me.
All right. Do you think that the price, differential between Nigeria and the market is an incentive to, smugglers? And what are the consequences of this contradiction?
All right, first, I'd like to start with the fact that these price differentials would amount to profit differences. So if the prices in Ghana and Cote d'Ivoire are higher than they are in Nigeria, which is actually the case, then of course there would be an incentive to smuggle. But however, this would not be smuggling into the country, or rather it would result in smuggling out of the country so as to sell at these globally competitive rates. Also, the consequences of this contradiction in prices: one, Nigeria would have increased high production levels and may still be ranked 5th in the world in terms of cocoa production. But however, our export value would continue to fall because more and more of this cocoa produce is going out of the country. And we've seen this because Cameroon, which is about the 7th or 8th ranked country in terms of cocoa production, has more export values than Nigeria. And this is attributable to these price differentials and also the loss of cocoa produce.
All right, so there are reports that there's a new variant of cocoa being used in southwest Nigeria, which allows for, multiple harvests in a year, of increasing yield per hectare. Do you think that this and other new initiatives will lead to, Nigeria catching up with other leading producers?
The Cocoa Research Institute of Nigeria, 10 years ago, to be quite brutally honest, actually came up with about 8 different variants. They are called CRIN-TC1 down to CRIN-TC8. So these new varieties are expected to reduce the maturity period from about 4 years to about 2 years. This actually shortens the window for cocoa to grow and for more produce to come out. It also makes the plant disease resistible. That means these cocoa plants are now more resistant to diseases and stronger, and also have quality taste as well. However, there's been lack of capacity and productivity in terms of the CRIN. This is due to the fact that the breeding gardens, because these new hybrids and varieties of cocoa have to be bred in gardens where there's pollination and other biological processes. These breeding gardens have been degraded over time, and some have even been sold for real estate projects. Also, there's no technology to improve the productivity of farmers within the sector as well. And the CRIN does not have the capacity to improve its multiplicity and distribution of newly bred seeds and also planting materials. So to answer your question, despite the fact that there are new varieties, this might not really help Nigeria to increase its production to catch up to Ghana, which produces above 700,000 metric tons, and Cote d'Ivoire, which produces about 2.03 million metric tons, which is times 10 of Nigeria's value. So it's a chicken and egg game. They have to sort out these structural issues before these new varieties can now even be a solution to increase Nigeria's competitive advantage.
Right. But global demand for cocoa weakened due to, COVID-19 pandemic, due to restrictions of gatherings and closure of cafes and restaurants. With the global economy, experiencing gradual recovery and lockdown measures being lifted, how do you see this impacting global economic recovery?
So on the onset of the pandemic, we saw airports close, which means shopping malls also stopped selling chocolates as well as other goods. Restaurants closed, cafes closed, and also hotels closed. And these are the largest clients of chocolate products and cocoa products as well. So this also resulted in reduced grinding processes, global grinding processes, which translates to reduced demand of cocoa overall. But with increased vaccine rollouts and with lower spreads of new breakouts and new waves, we expect that grinding processes will increase as airport capacity increase and flight operations resume. We also expect increased cocoa demand from hotels and restaurants as they open up their doors to new customers and increase their occupancy rates. So when this occurs, we expect that demand of cocoa will catch up with supply inevitably, and this will also help to stabilize prices and maybe increase them so that they will be also attractive and profitable to our customers. So the result of this would be a growth in the global cocoa industry and also improved production and also increased supply by other countries to meet up with demand. So there will be growth in prices, growth in the sector as well, and also full capacity in the economy.
All right, Mercy. Thank you so much. We'll keep tracking that. Mercy Lawrence is an analyst at Financial Derivatives Company. Thank you so much for your time.
Thank you.
And moving on now, a number of countries that have ratified the Africa Continental Free Trade Area Agreement have increased to 40 with the recent ratification of Zambia, Malawi, Algeria, and Burundi. The Secretary General, Wamkele Mene, says the DRC and Seychelles and Burundi ratified, but are yet to deposit their instruments of ratification. Burundi ratified the AFCFTA on June 17th, becoming the fourth East African community country to ratify, following in the footsteps of Rwanda, the most committed country to the agreement, Kenya and Uganda. The agreement, initiated in Kigali on March 21st, 2018, aims to create the largest free trade area in the world, and the EAC business community wants things fast-tracked. The Continental Free Trade Area aims to reduce all trade costs, eliminate 90% of tariffs, and enable Africa to integrate further into global supply chains. Malawi and Zimbabwe have signed bilateral trade agreements in order to boost trade between the two countries. The agreement follows up to another agreement which the two countries signed in 1995. With the agreement in place, Zimbabwean companies can export directly to Malawian companies using distributorship and agents. Zimbabwean companies can now open companies in Malawi and participate in tender bids. And the main trade between Zimbabwe and Malawi as of 2019 includes corrugated paperboard, cement, iron, and steel structures, packing containers of paper, paperboard, cellulose, wadding or webs of cellulose fibers, rough wood, agrochemicals, seeds, maize, and fish. Violent protests have dealt a blow to South Africa's efforts to rebuild the economy in the wake of the coronavirus pandemic. Small Business Institute has strongly condemned the wanton looting of businesses and destruction of vital economic infrastructure. Widespread looting and social unrest that's followed the imprisonment of former President Jacob Zuma is damaging business confidence, has disrupted key trade routes, and has seen businesses from banks and supermarkets to small-time traders shutting their doors. Ramaphosa appealed for calm in a televised address on Monday night, the second in 2 days, and warned that the riots pose a severe threat to food security and were disrupting efforts to inoculate people against the virus that causes COVID-19. The rand weakened as much as 2% against the dollar on Monday, the most since February 25th. And Rio Tinto says operations at its Richards Bay Minerals project in South Africa, which had been hit by violent community unrest, would remain closed despite talks with government. Rio Tinto was last month forced to declare a force majeure on customer contracts at RBM due to what it says was an escalation in the security situation at the operations, a month after the project's general manager was killed on his way to work. This follows local and international media reports that operations would resume on Monday following a crisis meeting with the government. The global miners suspended the $463 million Zulti South expansion project at RBM, a joint venture with a consortium of investors and community members called Blue Horizon, in 2019 due to security and community issues. The mineral sands project comprises mining, refining, smelting of heavy minerals or ore deposits, which are primarily used in industrial applications. And that's it on Business Incorporated today. Thank you for watching. I'm Ladi Williams. Bye for now.